Good afternoon. Today is Monday, August the 21st. The time right now in Singapore is 1:12 in the afternoon. Now, today's recording is a little bit late because I'm really tired after all the traveling we have done over the last week or so. Now, the thing is this week is going to be relatively quiet, at least up to Wednesday. From now until tomorrow, there is hardly any major or rather high impact economic data that will be released, so the market is likely to drift or maybe even corrects itself. Now, in the Dow Jones itself, you can see the micro E-mini Dow Jones futures has hit a bottom of 34,330 last week, and towards the end of Friday, we can see there was a bit of a profit taking going on, and this profit taking may actually last for the next 48 hours. And if the market do drift higher to, let's say, 35,000 to 35,150, I think that is going to be an area of resistance going forward. I do expect another dip below 34,330 before this down move here from 35,845. It probably ends by itself. So the immediate outlook is still for a minor rebound before the market goes lower. And over in the S&P 500, the same thing is also been seen. However, the S&P 500, unlike the Dow Jones, has actually dipped a lot further than the Dow Jones itself. We can see on Friday, we see the market dip to as low as 4,350 before we see a bit of a rebound, and tentatively I do expect a bounce to go back to 4,415 to 4,434 levels, and if that's the case, there will be likely to be a case of renewed selling from that level, gunning for at least 4,260 levels. And in the Nasdaq 100, the micro E-mini futures has also dropped to 14,609 and a quarter from a high of 16,062 and a half. So we can see there's quite a bit of a drop, more than 1,400 points already. And if we do see a rebound, likely to be the case, 15,100 to 15,300, we probably will see some kind of a resistance going forward for another dip below this 14,600, possibly to target 14,190 to 14,400 levels. So do look out for a bounce followed by a renewed selling going forward. Over in Asia, we can see that the Hong Kong market is still a little bit tentative. We have hit the target at 17,613 in the futures contract. My target is at 17,628, so technically it has already hit my target. So maybe for the time being, we probably will see a technical rebound, ideally back to 18,500 to 18,800 levels before we see renewed selling, which may take the Hang Seng Index even way below the December low. So now we can see that the Nikkei has actually struggled, and it has hit a low of 31,230 last week, and we are beginning to see a rebound. And this is on the news that the various Japanese authority right now has actually raised the minimum wage from last year's 31 yen to 41 yen. Hopefully this is going to be enough to drive the inflation going forward. What we are seeing in Japan right now is that the central bank still classified the inflation that we've seen over the last year and a half as transitory. Now, this language has been used by Jerome Powell in the early part of last year when he still refused to acknowledge there is a problem in inflation. So right now we have seen inflation at the highest in 2 years in Japan. However, the inflation that we are seeing in Japan is not so much consumer driven, but it is a imported inflation, largely due to the increase in energy prices, because we all know that Japan is totally dependent on the import of energy, in particular crude oil. And if crude oil is at current level above $80 per barrel, that will mean that in terms of importing the crude oil itself is going to be expensive. And of course, a weak currency does not help, because the Japanese yen is currently trading above 146. That means the import cost for energy is pretty high, and that is translating to inflation that we see in Japan. So this is probably the wrong kind of inflation that they want to see. That's the reason why they want to make sure the wages catch up to actually mitigate the imported inflation. So unless they can see consumer-driven inflation, they are unlikely to change the language. Okay, so going forward, we can see that the currency itself and a dollar remains very, very firm, at least this is what we see in the dollar index. The dollar index went up to a high last Friday at 103, almost 60, almost hitting my target at 103.84. So in the meantime, I do expect a little bit of a pullback because the market has no driver driving the market for the next 48 hours until Wednesday, when we see the purchasing managers report that will be released. And then in the meantime, the market could actually see some profit taking. I do expect market to drift a bit lower to 102.33 to 102.80 levels, and if that's the case, maybe that will be a base for it to propel even higher, perhaps to go even beyond 103.84. So this is, at least for now, what I think is likely to happen over the next 48 hours. So same thing for the currency markets. We can see the euro dollar has hit a bottom at 108.50 levels, and I do expect some kind of a bounce. And if there's going to be a bounce, I suspect it's going to be kept at 110, okay, just below 110 levels, and this could be another selling opportunity for those who are doing scalping. The market may actually go below 108.45 the next round. In sterling, we have a bit of a different dynamic going on here. The market has not gone down. Unlike the euro dollar, the market has actually rebounded from a low of 126.16, and we have a high of 127, almost 90, before the market drift back to 127. So this could be the base in which the market is going to base for a while before it propel higher. If that's the case, there's a likelihood for a three-way rebound back to 128.60 to even 129. Even from there, I think the market may actually come back down again. So, but in the meantime, I think it's likely to go higher, unlike in a much bigger way than, let's say, the euro versus the dollar. And Aussie dollar may have already hit the bottom. The low traded last week is 0.6365, and the market has been going flat over the last few hours of trading, and we can see that this could be building up to be a base for the market to actually attempt to rally, but I suspect the top side is 0.66. okay, so this is also going to be likely to see a rebound going forward. Now dollar yen is going to be interesting. We can see dollar yen came to 146, almost 60, before it comes under light profit taking into the weekend itself. So the lowest traded on Friday was actually at 144.90, before we can see a bit of a bounce this morning to 145.50, and now we are right now at 145.35. So meantime, I do expect the market to actually drift a little bit lower, ideally to test the initial support at 143.70, but anything can happen because the speculators seems to be testing the resolve of the Bank of Japan to actually intervene. The last time the market traded to 146 in September last year, the Bank of Japan came in to intervene. That caused a 600 pip fall within a 24 hours time bracket, and that is massive, because if you have never traded a bank intervention trade before, it could be very, very hairy, because a 600 points drop in dollar yen can happen very, very swiftly. So the thing is this, anything now above 146 is where I think we are in intervention watch area. I suspect if the market ever goes to 146.80 to 147.90, that will be an area which to me is a very dangerous level to be holding a long position. However, we can't sell right now unless there is some sign that the intervention is going to happen, because fundamentally the yen cannot be strong, okay, but however we also know that the Japanese authority cannot allow the yen to continue to weaken at the current pace, because it is causing a lot of damage for importing inflation into Japan. Earlier on, I mentioned the height of energy, and Japan is totally depending on the import of crude oil, and if the currency is weak, the relative cost on importing energy is going to be unbearable. Okay, so based on that, there should be some kind of incentive for the Japanese authority to want to bring down the dollar yen rate to a more realistic level. Okay, so currently any price higher than 146 is going to be very, very hairy, so do watch out for the eventuality. Now dollar Canadian continues to be very well beat, and the high traded last week was 135.75. There is a possibility it may actually edge higher to test the April high at 136.70 levels. Now this is not very far away. On a relative basis, it's possibly about another 100 pips away, so this is getting very close to this target. So maybe it will actually happen, and if there's going to be any pullback, I suspect the immediate bottom is going to be about 133.70 levels. Okay, so if you're not already bought, this is a lousy price to get in right now, and you definitely cannot sell right now because the market doesn't seem to have any clear signal that you want to come back down yet. Now, in the energy markets, earlier on I did mention crude oil is above $80 per barrel. It did went down to just under $79 per barrel last Thursday, and but now we can see that the market is doing a bounce. But I do expect lower prices going forward. This bounce is possibly part of a corrective rebound, ideally to be kept at $82 thereabout before the market comes back down and take out the $79 convincingly towards ideally $76. This is where I want to be a buyer. So I hope this can actually happen because I am long-term bullish on energy prices. Now, this precious metals, gold actually went on to a low this morning briefly below last Friday's low, $1,884.50 in the spot market. But right now you can see there's a bit of a rebound, and this rebound, if you can sustain, could be the turning point for at least for the short term. Okay, the market has briefly taken out the June low at $1,892.80 last week, and now if this rebound can sustain and it can actually amount to a more robust rebound, I think there's a possibility of the market retesting the $1,918 to $1,928 before we see a next move. Okay, for now, it seems unless the dollar comes back down, the dollar has been very, very strong, which resulted in a corresponding decline in precious metal prices, and this is to be expected. And if we're going to see dollar weakening, then there's a good chance that the gold may actually rally. Okay, so in the meantime, we can see silver has already bottomed way ahead of gold, and we see that the low traded $22.11 was actually traded last Tuesday. So we can see the market has already rebounded way before the market hit a bottom in gold this morning. So basically, I think the market is probably going to rebound. For the time being, it has been kept at $23, but let's see what happens. There is a possibility I want to see a more robust rebound, ideally into $23.50 to $23.80 thereabout before we see a new pattern emerge. Now, Bitcoin has been on the defensive. There was this big drop over the weekend, and on reports that SpaceX, the company linked to Elon Musk, has actually unloaded their holdings on Bitcoin. So that was the rumor. Not sure, there is no confirmation of the report, but that's enough to cause Bitcoin prices to fall from just under 29,000 all the way to 26,000 before it's consolidated. There's a very good likelihood it may actually drift a little bit lower. Near-term target is possibly somewhere between 25,600 to $24,800. Okay, so let's see what happens if the market do ever get there. By and large, I do expect Bitcoin to find its footing at some point in time, but right now it is on the defensive. Let's see how far it will go. That's all I have for you for today. In the meantime, you take care. I'll come back to you tomorrow with another update. Bye-bye.